are watching The Educated Weirdo.
What's going on, you guys? It's your boy, The Educated Weirdo, back with kind of a part 2 of a video that I started the other day. I broke all this down, left everything drawn up on the charts, other than I think I took one thing off, like the golden zone or something like that. But I'll probably draw up another one here because I do see, just to jump right into it, I do see an exhaustion point here at the bottom. I'll zoom in a little bit more. There's a tail here that's giving me signs of, and it has a pretty big candlestick, so I know that tail in comparison to the candlesticks doesn't really do any justice. But if you go down on a smaller time scale, which I'm not going to do in this video, you can see why I say that's an exhaustion point. So basically it's ranging and consolidating here, so I boxed this up. So what I'm going to do at this point is wait for it to actually come outside of this box that I've drawn here, this blue box. And once it leaves this box, I predict that it's going to go back in the air. Now, the reason I say that is, if you zoom out here, overall higher highs, higher lows, higher highs is being created on this side. Here is technically speaking, this would be a break of structure on a major level. So if it's a true break of structure, it will start creating lower highs and lower lows. So in an attempt to do that, it would have to come here and then turn around and go back there. So this is what I'm going to bank off of. So if the market stays true, I predict that it's going to leave out of this box that it's ranging and consolidating in right now. I'm going to hit play on that. If it leaves this region and actually starts to go to this region, if you're a counter trader or you're a trend trader, you know, this depends on your I guess the style of trading and whatever. At this point, with it breaking out of here, I wouldn't have took this trade myself, but I'll tell you what I would have done. I would have got my Fibonacci retracement tool, and in fact it's kind of already here on this other trade, but I'm going to show you. I'm going to leave that there. I'm not going to mess with that. I'm going to lay another one on top of the one that I already have, and I'm going to target this exhaustion area down here. Now it looks really confusing, so I'm probably going to draw this out just so you can see the two different ones, so you don't get too well, I'll tell you, I already see a problem here, but we'll make it work. So we'll move this one over, but we'll keep the same points so you can see I'm going from that same high to the new low. So this was the old one and this is the new one. This is the one that I'm going to use today to actually enter a trade. So what I have to do is mark my golden zone here. So I'm just going to use this, and I'm looking for that 38 level right here, and I'm looking for the 6-1. It's kind of covered up a little bit, but it's in here. Okay, now I'm going to change the color of that. I'm going to change that down to gold because that is my new golden zone here. Now you notice something. You notice that there is a green area that I drew up last time on the last video. That was a money area. That was an area of support and resistance. So you notice that area is overlapping with my golden zone. So that's two confluences in the trading world is what we call that. And that's just off just basic structure, basically market structure. If I'm using no real indicators, anything like that to come to that conclusion. So if you were trading here, you could put a stop loss there and you could ride it to that area and take profit there. But me, I'm going to let that go up into this area, wait for some kind of exhaustion signal, jump into the trade and put stop loss above the golden zone, and I'm going to ride that back down there. And the reason I'm doing that is because on the higher time scales, there is a break in the major structure. Therefore, I'm thinking the market is going to be heading back down, and that's just my philosophy on that. So let's just hit play. Let that play for a second. And like a magnet, it is going right into those two areas. You see how that works? Look, boom, hit it right to the T. I cannot make this stuff up. Hit it right to the T. So at that point, I could have been in a trade on that. Probably wouldn't have got in quite there, but if I did, let's say, because that was like a nice little tail there on that chart on the candlestick. So could have got in there. I probably would have put my stop loss above, me playing it safe, I would have put it above here, so right in this area, because if I did get in on that, now me personally, I probably wouldn't have been in the trade yet. I would just let this play out a little bit more, just a little bit more, because sometimes there's liquidity above these areas, and smart money knows that, and they'll wait and they'll push above outside of that golden zone. So you see that little bit. So now I probably would have went ahead and entered off of that exhaustion point. I would have put my stop loss, still playing it safe. I could have put it above here, or I could have put it above here because that's the last high point over there. So probably would have put, me personally would have put it there, and then as it would move down, I would have put it above that and then just followed it down. But it's neither here or there for now. But just know I would have been in the trade. Stop loss would have been somewhere high. So I'd have waited and I would have been targeting this area down here personally. So let's just let this play out and see. And while this play out, I'm just going to keep talking. Basically, I entered the trade because of the golden zone. The 61.8 area was being hit, and that's a reversal point. And I would have got in off of that and put my stop loss up here, and we would have been in profit, and my target area would have been about middle ways here, somewhere close to it. So we would have been in profit or close to in profit, and I think that is, yeah. So see that last little kick there, boom. I probably would have put it in the range, but knowing me, I would have just took profit anyway, because it would have been the end of the I think that was actually the end of the trading day today. So I don't like to go into the weekend, so I would have just took whatever profit was there. That would have been a couple $100, I would have done $1,000, whatever. But yeah, you see how everything goes. So you go from this side, and I drew that up, and it stayed true over here on this side. So whatever happens on the left happens on the right. You basically saw that play out. This is how I would have marked up the charts if I would have actually took the trade, but I didn't take these trades, but just hypothetically speaking. And this is, like I said, that's the last video, so I won't go over there. But here, just overall market structure, that's all it is. Once you understand market structure, you don't need all these indicators and all this other crazy crap on your charts. Just pure price action and proper structure. All right. Hope you guys enjoyed. I am out.